Hey traders, Raghee here, and in this recap video I want to address day trading because that's been so much of our focus over the past few weeks. Now, I've spent a few sessions talking about why the day trading approach is making so much sense now, and a lot of it stems from, believe it or not, the longer term daily time frame. When daily time frames are stuck in a range, when they're essentially not going anywhere, we know that the movement from top to bottom is much more truncated, so it's better off to look at shorter term time frames. Now, day trading as a strategy, I think, is a bit of a non-starter. I mean, any strategy really needs 5 things: clarity, setup, a trigger, follow through, and an exit. Now, if you're day trading, your goal is to be flat, which is with no position by the end of that session. That could be a European, UK, US, or Asian session. So really now in a 24-hour global market, the word day trading probably means less than ever, but we know what the ambition is. It's to be flat. So to get those 5 things, we usually seek shorter term time frames. And this is a great example of something we did this afternoon in both the Dow and the NASDAQ, and I sure was trying to get it done in the S&P too, but it never caught up. So let's talk about what we did, what we saw, and how you can replicate this. And this is going to be really tactical. So if you are already familiar with my TOPS indicators, which includes the grab candles, my wave, Darvis, and propulsion dots. Now, grab and wave are pretty much one indicator, the 3 moving averages and the color-coded candles. Propulsion is an acceleration tool that utilizes the 8 and the 21 EMAs, and Darvis is about the best automated support and resistance methodology and indicator you're ever going to use. I've had experienced traders. I just got back from London and had an experienced, and I mean salty dog type trader, say that is one of the coolest things I've ever seen, and I'm going to put that on my charts. And I said, well, I can't take credit. A Hungarian dancer back in 1960 developed it. So we had a good chuckle, and nonetheless, Darvis is on his charts now. So when you automate your analysis, you can keep up with the speed of what day trading is. And I think a lot of people think day trading is risky, but really I'll take another tack to it. Day trading is ideal for traders with smaller accounts. It's ideal for traders with less risk tolerance, but it's also advanced in that the speed in which you have to execute your trades becomes kind of tricky. So let's talk about something we did today into the close. And you can see it on the 3-minute, you can see it on the 2-minute, and that was a zone that lined up with the Darvis. And this, I call this the Darvis and dots. So I have the Darvis level right here, and I have the dots right there. So when I get that lined up, I know I've got a pre-existing support or resistance level with the 21 EMA in close proximity. The 21 EMA is where these dots plot, and the Darvis is the resistance. So I know that there could be selling pressure. And if I'm looking at a downtrend and the market finally corrects higher, that's a place that I want to be positioned at to get short. And that's exactly what we did. Now, the speed that that's required, in this case, think about you had about, let's see, 6 to 8 minutes to watch minimally this market to say, well, I'm interested in this zone around 236. And that way you had a little bit of time to go to your platform and type in a limit order to short at 236. So not everything has to be rapid fire market trades. This doesn't always happen. Today it just happened to work out that way. So we ended up taking this short, and I'll tell you what, another thing that was really interesting is we waited and waited and waited and waited for this criteria to be met. And it really did feel like this market was just going to leave without us. And believe me, I'm sitting in front of a live group of traders, and I really want a piece of this trade because it's selling off and selling off. But I teach everybody, wait for the criteria. And I believe in that. That's what I do for myself. We finally got the opportunity, got our 236 entry. We actually popped up all the way to 250. That's 14 points of risk. Well, within the context of the Dow, where I'm fully ready for anywhere from 50 to 75 points to 100 points of risk, 14 really isn't much at all. And I know my risk is basically limited to the opposite side of the wave. Now, it's not risk-free, it's just lower risk. We're risking less because the time frames don't really allow the market to move against us all that far. Well, find the exhaustion And really being patient is a great feeling, because what then happened is the rest of the end of month shenanigans. And a lot of you know we sliced down not only through 25.2, we sliced down through 25.1, and for a brief amount of time, I thought we might slice down through 25, giving us a huge 200 plus win. We had a good 180 to 200 point win, which was a great way to end the day. And that all happened in less than 30 minutes. And I got to mention, all because we were patient enough to wait for the top syndicators to fire off their trend follow within the context of this meltdown. I'll see you in the next update.